Hi, I'm Todd Turnwald, and today I've got my partner in crime, Ricky Ballard. Ricky, thanks for being here today.
Absolutely excited to be here.
Awesome, awesome. Hey, guys, we're coming to you today, speaking to the final expense agents, Medicare agents, or maybe the folks that are wanting to get into the insurance industry. We are launching a brand new final expense product. This has been in the works for a good 14 months. So to say that we're excited is probably an understatement. But to give you a little background of why we felt this product was so important, with Ricky and I, we both have come from the broker space. A lot of good carriers, a lot of good companies out there, but we wanted to do something a little bit different. Okay, so the thought process behind this product was to basically provide three things. One, we wanted to make sure that we had very liberal underwriting. Two, we wanted to make sure that we had excellent rates for our clients. And three, we wanted to build in the best residual income in the final expense industry. And I can't take a lot of credit for a lot of those things, but with the folks that we were able to work with, I believe, Rick, we knocked it out of the park.
I would agree.
So what we're going to talk about here a little bit today is why this product makes sense. This is a product with a platinum solution. It is a levelized commission, and it's built similar to the Medicare Advantage commission levels. But what we found was Medicare Advantage basically stays on the books for about 5.4 years, 5.6 years. So we've done a final expense product that will go 6 years level. Okay, so same commission levels for 6 years straight. And the biggest reason why, between Rick and myself, what we were seeing in the broker space was a lot of front-end commissions, which again, we have those, so we're excited to have those high commission levels, and it definitely helps to get that revenue up front. But what we were seeing more and more of was folks not having hardly any residual income, back-end income. And I know when I got into business, and probably same for you, Rick, that was probably the biggest reason why we got into the business was for the residual fact. And with how things are working, and the trend has been more front-loaded with very little on the back end, we felt it was time for a change. And between Rick and myself, we were seeing a lot of final expense agents wanting to get into Medicare, which having Medicare is very, very beneficial for an agent. But you're also going to have guys like myself who we're final expense guys. We're guys who don't want to take AHIP. We're guys who don't want to do certifications. And yes, Medicare is a huge thing for our client base, but for the agent, it can get pretty cumbersome. And our feeling was if we could come out there with very liberal underwriting rates that were excellent for smoking, non-smoking, 55 to 85, and have the best, literally the best residuals in the business, it's going to be a home run all the way around. So a big part of getting this done was my partner, Ricky Ballard out of East Texas. And Rick, I think what sealed the deal here to get this over the top was the levelized commission. So you could just talk to us a little bit about what your mindset was, because you were the one that said, hey, let's go this commission level over this amount of time, and let's ride that.
Absolutely. So when we look at first and foremost, thank you to Senior Life for giving us the opportunity to do something like this. A lot of gratitude that we may have the opportunity to be able to do something custom like this, and that they'd be willing to hear us out on what I feel is a big need in the industry. I know a lot of times in final expense, agents feel like they're just stuck on a hamster wheel. And what the answer has been, as we've seen it swing in the industry, to build that passive income has 100% been swinging to Medicare Advantage. But the barrier of entry for Medicare Advantage is, it can be tough to learn. There's a learning curve, a very real learning curve there, right? And we all know that the barrier to entry in final expense is marketing expense.
Sure.
right, is going to be your marketing spend. And so it gives agents a choice. Like, hey man, would you rather spend more on marketing and increase your production and bring 25% of your production here to where you don't have to go through a substantial learning curve on the Medicare side and build a passive play? Or would you, not have that barrier to entry and marketing expenses and go into the Medicare space, but also have to learn? We're all going to have to give up something to make this work. With this product, what agents can do is just increase their marketing spend 50%, increase their production by 25%, and have it go directly to this product, and they're going to build a passive, not having to change anything that they're doing. All of us want to come into this space, and all of us were promised in this space that we were going to get mailbox money, right? But as we look at kind of what's going on and the way the pendulum is swaying in final expense, everything's gotten more and more and more front-loaded, and by things going front-loaded, things have to get skinny on the back end. It's just,
have both.
you can't have both. You're just moving money.
Yeah.
We're moving money from the back end and putting it on the front end. And I understand that every one of us need revenue to run our companies.
Sure.
And a front-loaded commission allows that revenue to flow. And so we want that with that revenue, it allows us to be able to run our companies. But final expense agents, what have you done in the last year for your families? Revenue's for your company. Passive is for your family. And so a lot of us feel like we're just stuck on this hamster wheel where we can't get off of it because there is no back end to what we're doing. And guys, I'll tell you, in the space, if we're going to calm the waters, if we're going to create an environment of stability, it'll come in passive, right? And so this product does that. To be able to say, hey man, I'm going to shift a percentage of my business and my distribution to be able to build a residual income, that's what we all want to do.
Sure.
And so very thankful for what this is going to do. For guys to be able to write a product, to be able to, build a back-end income for over 6 years, rather than just getting a big front-loaded commission at an advance. It eliminates risk. Yeah. It makes the company profitable. It's profitable. The underwriting is substantial. The price point is substantial, and married with legacy and the value that legacy is going to bring, you'll have the best price in the market. You'll have the most liberal underwriting in the market. You'll have a true value add with legacy to be able to substantiate the sell in value. Not only that, you're also going to be able to build a residual income. So it's a product that every final expense agent needs to offer. You need to have it in the bag so that you're able to truly bring some value to your clients. It's client driven and it's agent driven.
Correct.
And that's what we want. We want this to be grassroots, to be focused on the people that matter. The people that matter in this space is the client, number one, the agent, number two, and that it has integrity to the company, senior life, number three. This product absolutely does all three of those things.
100%. And I think you hit some big things there because what you aren't saying is someone has to, now they can, but what you're not saying is someone has to go out there and sell this product exclusively. What you're saying is, let's not disrupt your business, but if you shift 25% of that to your book of business, just think about what kind of residual that's going to build up. And what I have shared with folks is, if you're setting financially okay, then I would run the fire out of this product because it's very simple, it's easy, and you're building that back end income up even more, especially if you want to get into being a manager. Because everybody knows when you build an agency, the money that you make could go down for a little bit.
Oh, absolutely. And what you're seeing, Todd, in my opinion, is number one, I would encourage, if you are a true final expense broker, don't go 100% to this product. People would say, well, that's crazy. You guys created this product. Well, it's not about the product. It's about your business. And so your business, you have to have revenue. Revenue comes from front-loaded commissions and your production. So you have to go out and write a certain amount of front-loaded commissions for the revenue to make sure you can cover your marketing expenses, so you can run your household, so you can pay for gas money, so you can, maintain integrity in your life. But if you want to get off that hamster wheel, guys, if you don't want to be 60 years old and banging doors when you're 60, you got to start building and substantiating some back end. And the way that you do that is through a product like this. Just shift 25%. But what will happen is this year it'll be 25%. Next year it'll be 50%. And then the year after that it'll be 75%. And then you can shift to 100% of this. But you have to scaffold yourself off of this. We've kind of became, as a culture in final expense, addicted to the front-loaded commissions. And so that forces us to continue to have to go out and stay after it. When it comes on a passive play, what happens in my mind is it creates stability. We can create real stability to where after a 12-month, 24-month run of adding this product in, you're going to be in really good shape. And then let's not forget about Medicare agents, right? So as a Medicare agent, most Medicare agents, this is going to sound totally crazy, but most Medicare agents have all of their life contracts as earned, 100%, because they don't want the chargeback. They don't want the advance commission.
Gotcha. Yep.
Okay, so but in this space, why would they sell a front-loaded commission product on an as-earned basis when they could come in and sell this product that just mimics having another Medicare Advantage in the home?
100%.
Right? And so like you'll hear me speak often about trying to get people to 800 pieces of business on the book because that's a $250,000 passive play. Well, if you add this in as a Medicare agent, you add this product in and just ask the question compliantly while you're in the home with your book of business, then essentially maybe you only have to have 600 clients on the book and 200 of these applications rolling. And so it's a mindset to where we're going to all mailbox money. I just feel, and it's probably not going to be popular to say this, but I just feel what's happened is we have seen a shift in the culture of our industry to everything being so front-loaded that all we've done is become enslaved to front-loaded commissions.
Well, and the other thing that I'm seeing more and more, and I think you are too, because we're fielding a lot of calls, because obviously this is gaining some attention, but even the trend in the industry has been so much of recruit, build, and not everybody is financially sound enough to start doing that. And then what they end up doing is getting themselves in trouble. Now, am I saying don't build, don't grow? Absolutely not. I think that's super important. But you want to start doing that when you're financially set, and when you know you have some of this, when you build that residual up enough, so you're just mitigating some risk.
Sure. Well, this is a question each of us have to ask ourselves as business owners. If you were to stop doing what you're doing today, what would you have? And here's the argument, guys, is I would almost say that most of you that are just writing front-loaded commissions, you want to know what you would have if you quit today? Debt, and a bunch of it. Because 25% to 30% of your clients are going to fall off the book. Whether you want to admit that or not, if you were to shift and go into some other space and leave where we're currently at, what have you built for your families? I mean, let's just be honest about it. You haven't built anything for your family. You're a salesman. I'm a business owner, and I want to be a business owner. And so for me to build a business comes in passive, and it always will. Whenever you get mailbox money rolling, that's whenever, if you get a valuation on your company, are they going to look at your front-loaded commissions? They're going to look at passive. They're going to look at residual income. And so if we're going to truly be a grassroots type of leadership here, then we need to make sure that we're teaching our agents how to build a business. And to build a business, they use your front-loaded commissions as revenue, and you got to have something on the back end to build a passive. Because if I walk away today, I'm not going to have debt.
Right.
I'm not walking away from. I've built a passive income. I've built a residual income. There's something that stands for what I've built over the last 2.5 years, right? And that's the integrity we've got to bring back to this model. Okay.
100%, because I see more and more we have really good agents out there, and sometimes guys will get into that year 3, year 4, year 5, and they might get into some of that burnout stage or whatnot. But since the residuals are historically pretty low on most products because the trend kept going higher and higher, and again, there's a need for that. But when it's all that way, it makes it really, really tough on those guys. Where here, you make a good 3-4 year run on this product, and you're building that back end money. That's huge.
Well, Todd, what happens is like when I sit down and visit with guys on a one-on-one level, and I just keeping it real with guys, the question that I always ask is like, man, you're making all this money. And he's like, the question that I get is, the money I make, I spend. Right? The money that we make, we spend. Okay, so if it's front-loaded, where are we spending it? Are we truly spending it and investing it and doing the things that we're supposed to do? The answer, guys, if we're going to be honest with each other, is not. We're spending that money. We're buying a little nicer car, a little bigger house. Mama's getting a few more pairs of shoes. All of those things are happening, but none of it's substantiating our lifestyle, and so we actually trap ourselves in the model. And what I'm inviting all of you to do is to get out of that model. Get to a point where you're substantiating some real passive income and some freedom and creating that in your lives. And that's what's going to allow you in 6 years to be able to look back and say, man, if something happened to your health, let's say you don't want to walk away. Let's just say something happens to your health. What's going to happen to your family for the next 6 years? Well, if you write this product, I can tell you what will happen. They're going to continue to get mailbox money coming in for your family.
Well, let's be honest, the whole COVID thing, it shifted a lot of folks to telesales, which is fine. But those folks who weren't comfortable with phone sales and had very little residual build up, those families hurt.
Of course.
I mean, because, for how long we couldn't go out in the field to see people face to face, right? So, again, it will just depend on how folks are financially, how the agents are financially. If you're sitting pretty good, I would want to put all my chips in and build the back end money. If money's pretty tight for you right now, I would, like Rick said, and it's kind of like what I'm hearing. I'm not involved in the Medicare space, but what I'm hearing from people is, writing, 3 to 5 Medicare a week is kind of what the trend is, and all that is building that back end money, right? Which is great. I think that's a great model, but again, you're going to have the flip side where, again, people don't want to do AHIP, they don't want to do the certs, they don't want to do all that stuff. And if they do, great. Now they're building even more on the back end doing Medicare and this. So, you really can't go wrong with this product. The last thing we want to do is disrupt anybody. Our whole mission here is to help as many agents that we possibly can build up their back end residual money. Because I think that this is a very special industry with a lot of very special people in it. And what I hear, Rick, and I'm sure you do too, is a lot of times when we're talking to brokers, one of the first things that they're going to say out of their mouth is, when we ask, well, who do you typically use? Which carrier? Well, I just want to do what's best for the client. I just want to do what's best for the client. And now we'll find out if that's true.
Absolutely. And so one of the things that, like, if we're going to get into some specifics too, Todd, I'd like to talk some numbers for a minute, right? And so we have some pretty cool things going on with Medicare, but this year we're seeing some things go up to $301 on a street level contract is what somebody's going to get paid for the life of the client. Okay? So let's talk about this product for just a minute.
Sure.
And let's get in the weeds of it a little bit, right? So the national average of a final expense product for monthly premium is $68, right? You do that at a 12 at ALP, 12 months, it's $816, okay? Let's look at a 25% commission of $816. Guys, you're hitting right in there between the $250, $300 mark, which is just like doubling it up in a house, right? And so what if every single house as a Medicare agent or as a final expense agent, you could walk into it, and if you were to service that client, you could get both in the house, and you were to build, say, a $600 to a $700 passive income while you're in that house. How is that not the same as writing just a final expense product?
100%.
This product, this mindset is what's going to, most of us, if you do a 68, let's just do the math, $68, right? You do at a 12-month advance, right? That's $816. Now do that at a 9-month advance, you're making $750.
Right.
So for those of you guys that are trying to cross over into the space that is where you're trying to build passive and you've just been a final expense agent, right? This is your product. Because now if you go in and sell the Platinum and you go in and sell a Medicare Advantage policy, when you add the two together, it's going to equal $750. If you go in and just sell final expense, and final expense only on a front-loaded commission at 100%, $816 at a 9-month advance, you're making $750. So get better. Get better. Offer both, put both products into place that are both passive now, and go write 800 of these things and make $250,000 a year passively, instead of making $250,000 a year having to bang doors all the time. Like, this mindset is for the agent. This mindset is for you guys to be able to go out and truly have a tool belt where you can be successful and build real passive income for your families, instead of, just feeling trapped. And the reality is, I talk to you guys on the phone. I know what it is. Y'all get on the phone and you'll keep it 100 with me. And when I talk to you, you're like, man, Rick, I've been doing this for 7 years and I'm exactly where I am today that I was 7 years ago. Then go back to coaching football, bro. Like, what are you doing? Like, the reason we came into this space was to have something be transformative, right? We wanted our lives to transform. And all you dudes are is transactional. And I'm sorry, I'm just keeping it real today, right? And that's what it is. A front-loaded commission is a transaction, but if you want to transform your family's life, you do it passively. And I'm telling you, that my phone's going to go crazy as soon as this thing gets posted. Not because it's popular to the agent, but it's disruptive in the mindset of what this business has become. And we've got to be better. As leaders, we've got to be better.
Well, and to feed off of that, like I said earlier, anytime you build a product, and as an agent, of course, all I wanted was a product that was as cheap as you could possibly get, right?
Right.
And and then stepping into this platform, helping these guys build this product, doing the underwriting, getting all the pricing together, I really learned a lot. One thing I did learn is I will never question an actuary ever again. I'll never do that. They're pretty sharp. But what we've done was, provide a great vehicle for agents and clients, and also the company, right? Because everybody's got to win here. The company's got to make money, otherwise you have no product. So we got to make sure the company is making money, which we are, and we're making sure that the agent, it's very agent friendly, and our whole business revolves around the client, right? So getting, money's tight, so being able to put them in a position where they can get a good amount of insurance for, a very good rate, I think is super important. So the product is built very soundly, right? Because we had to take in the risk, and we've done that. We had to take in, obviously, the rates, and then the commission. So, what I've learned here is it's got to be built on basically a three-legged stool, and that stool has got to be strong. And all we did here was just maybe lessen the stool, just bring the stool down a little bit. But it's built so that each party wins,
Sure.
and I feel wins very big.
I agree, and I also want to challenge some things here a little bit too while we're in it. Let's get in it. So, in Final Expense, we have a right business and run culture. Right? Like, if we're going to be honest with each other, right business, run, we're on to the next one because we have to. It's a volume play. I'm going to buy my 40 leads. I'm going to close my 8 pieces of business, and then I'm on to the next week. Well, what about the 8 people we wrote last week? It's a write and run, and all of us are just praying that it stays on the books for 9 months. There's no service in that, right? And what this model does is it allows you to be able to do a couple of things. A couple of things that I believe in. Number one, you're going to service your client because you're going to fight for those commissions. And so when the product was designed, number one, we wanted the price point to be a point where it wouldn't be could be replaced, right? We all know how that works in this space, is that people come in and replace our business and it's replaced on price. Not anymore. We got the price. Okay? Second thing is I really wanted it, and we really wanted it to be a value add, right? So let's talk about the value add. Now you guys got to remember, I come from the broker space, right? So I didn't know nothing about legacy. And as I started learning about legacy, that's a value add.
Oh, yeah.
It's a substantial value add. So not only now do we have the best price, but we have the value too. Okay, and then what else are we creating, guys? And I want you to hear this. We're creating an army of agents that will 100% fight to keep these clients on the book because it's going to pay you for the next 6 years. Right?
Yep.
And so tell me what your persistency is going to do.
It's going to go up.
It's going to go up, right? Let me tell you this. What if you add a Medicare piece of business in there? What's going to happen? Now you've got 2 hooks in them,
Yeah.
right, in your clients that you can help them with. But what if you go and help them with their Medicaid, and now you got 3 hooks in them? What if you had a hospital indemnity? Now you got 4 hooks in them. What do you think your persistency is going to go to? You think they're going to shop you? You think those people are going to fall off? The design has to go back to being client-driven. It has to go back to being agent-driven. And what we've done is created a culture that we're transactionally driven. And that's on us. I mean, we're just as guilty as anyone in this thing, right? Like, oh, let's fight and claw to try to get the 150 or whatever, right? And so we fight and claw to get there. And once we get there, what do we got?
Right.
An extra 20 points? 20 points of what? You know, the reality is like we need to focus on what our clients need. So now let's just talk for a minute, what we can offer our clients.
Right.
I'd be very proud to go in and be able to tell one of my loved ones, listen, we're going to be able to lock in your funeral merchandise. We're going to negotiate with the funeral home, right? We're going to be able to make sure that someone advocates for your family and while you're celebrating your family member's life. The price is the best in the market. There's nothing else that's better out there, right? It's backed by Senior Life, who's a final expense company, and that's what they believe in, okay? And then, not only that, we can talk about something else. Let's talk about your health. Let's talk about your health insurance. And we get into that space, and I can really service those people on that side, right? Let me eliminate some risk there, because isn't that our job as insurance, as being the insurance man, is to eliminate people's risk, right? But I would argue that the culture of the industry, that's not what we're doing. Like, let's just introduce the elephant in the room. What we're doing is making a lick. And there's some of us that are making a bunch of money doing this. And for what? You know?
Well, and I think you hit it right on the head there. As far as final expense, I'll go on record to say, as far as living people right now, no one knows the space better than Ron Powell.
I would agree.
Period. And people can challenge it. But, you know, Rick, you know this as well as I do it, and we're going to start getting the same thing. Whenever you start doing something that brings some attention or is disruptive, or you know, you start getting a big part of the market, people aren't going to like you. Is what it is.
I'm
so people can,
living there.
Yeah, and that's just how it is. But you know, the one thing with Ron, like him, love him, whatever, the guy is sharp as a tack when it comes to final expense, and his people are well trained on products and what it takes in this space. So I can say factually, like anything built by him, or that he's gave his blessing, it's going to be pretty good.
Well, 100%. I mean, the meeting that we had, the original meeting that we had, right, in the conference room up there, we were talking about the product, right, and what the vision of everything was. And he looked right at me and said, "Would you write that product? Remember it?"
Yep.
I said, "Would I write it? I'd write it all day long. Are you kidding me?" And he was like, and then we kind of went through some stuff, and he was like, "You'd write that. All day long I would write that." Okay, so and I'm going to prove a point right here. So my 19-year-old son graduated top in his class, could have went to Rice, right? Had offers, scored 31 on the ACT, right? Do you want to know what he's doing? He's selling a passive income product right now. He's got 300 on the book, and in January he'll be making $60,000 in passive income a year. He can't even buy a beer legally yet, guys. By the time he's 21 years old, he'll be making $500,000 a year passively with this product now. Tell me I don't believe in this, right? You've seen it. You've come to the house.
That's facts, yeah.
Those are the things that are going on, okay? And so when you're looking at the things that are happening here, if we have the opportunity to customize the market to the way we want it to be as agents, why would you not do it this way? Change your habits. What you have right now are spending habits and bad spending habits. And you're living on a fast money play, and fast money is what? A fast death. It always has been. It always has been. You know, and in this play, what we can do right here is build a passive income. Something that's real, very real. How cool would that be to be 19 years old and you know in January that you're going to have a $6,000, $7,000 a month deposit in your bank account?
That's as good as it gets.
That's as good as it gets. And you want to know how many? He hadn't even had the opportunity to sell this yet.
Right.
If he starts selling this product, he'd be double that. He'd be at 600. and then he'd be getting $12,000 a month deposited in his account, right? But he don't live a fast money lifestyle. What kind of car does he drive, Todd? You know.
Old hoopty.
It's an old hoopty, man. He's an insurance agent. You want to know why? Because money, if you're truly service-oriented in the space, money's a byproduct of the service that you're doing. And tell me if we're going to be honest with each other in the podcast here, is that the culture of this industry right now?
Not quite.
Not quite. It's the furthest thing from it. And at the end of the day, if we're going to serve clients and serve seniors, 74 million Medicare beneficiaries by 2024. Same exact target market and demographic nationally that we're marketing in final expense. Even better because you can drop it from 65 to 50. So that market's even bigger.
100%.
Right? And we can market and hopefully serve these people. But the goal of what we're trying to do here is build a passive income for our families that should be a byproduct of the service that we're doing for these families.
100%.
You know?
So this final expense product, Platinum Solution, basically it's going to do a few things. All right, we're going to have the best residual on the market in the final expense industry. Very liberal underwriting, very liberal height weight chart. Okay, commission levels, levelized commission all the way through. Excellent rates, 55 to 85 for smoking, non-smoking. This is a product you need in your arsenal. So all you're going to have to do is drop down below, hit the contracting link. You'll see the commission grids on there, production requirements. This is an opportunity for you to advance higher commission levels. So you'll have that same deal with those. But we want to keep things very simplistic, very simple. It's an easy contract. It's a very simple and easy e-app in our slice. You plug the medications in. It will tell you right then and there if yes, they qualify, no, they don't. 8 health questions. I don't think you get much easier than that.
Declinable medication list,
Yep.
So that you can go down the list, look at the declinable meds, and as long as they don't have a declinable med, you're going to be able to get these people. If they can answer all the 8 questions correctly, and they're not taking the declinable med, let's get them approved and get them good insurance, and then also support that insurance with legacy all day long.
100%.
And so let's talk. I want to bring this up too, because I think it's important to what we're doing here. Is who is this product for in the marketplace as an agent, right? So a lot of you guys are going to watch this and ask yourself the question, well, is this product for me, right? I'm just a final expense guy. I just started into the space. This is what I would say. If you're a final expense agent and all you do is final expense, keep doing what you're doing. Increase your marketing spend. Give 4 more presentations a week and make sure they go to this product. And watch what happens to your life and to your passive income in the next 24 months, right? Number 2, if you're a call center, let's say you have a huge call center, and you're playing on a front-loaded commission, okay? And you have LOA agents, license-only agents, and employee model. What would I say? I'd say add 25% of this to your business and watch the passive income come. Let's say you're an LOA call center that has capital backing you, right? Well, why do a front-loaded commission? Why not use that revenue to turn this into a 6-year run instead of a 1-year run or a 9-month run? Why would you not do that, right? And so look at how the numbers work and how you're playing with your numbers there. Let's say you're just a call center agent on your own, right? And you're just doing outbound dials or taking live transfers, right? Why would you not add in another 25% of your business being this right here on the final expense side? Okay, if you're a Medicare agent, right, and you just write Medicare and you have all of your contracts right now as earned, and you're really not asking the question to your clients in the home, ask the question.
Sure.
And sell this product and double it, right? Your mindset, this should be your mindset. Your mindset as an agent should be, how fast can I get 800 clients on the book on a passive play and maintain those clients and maintain them. You do that at a $301 average, right? That's 240 grand a year, okay? Here's an exercise for you. Why don't you Google the top 5% of income earners in the United States? Most people don't know what that is. Probably thinking, oh, top 5, to break into the top 5% of the United States, I've got to make 400 grand. False. make $185,000 to $190,000 a year in the top 5% of income earners in the United States. To break in the top 1% of income earners in the United States, break the threshold of $350,000 a year. Guys, you're putting yourself with 800 clients on the book on a passive play and putting yourself in the top 5% of income earners in the United States.
100%.
That's ridiculous, right? And it's passive. It's mailbox money.
Yeah, the thing, so as far as commission levels, the floor is 25%, and it's 25% over 6 years. So 25% of the AP over the course of 6 years, that's the floor. All right, if you have an agency, obviously, we can look at production there. It goes from 25 to 50 in 2.5 point increments. So you want to get contracted, you want to get started today. If you have production, then you got to let us know what kind of production levels you've got. We need to see those, but it will default to 25%, max contract of 50. Overrides, it keeps the same integrity over 6 years. So if you have a 5 point, 10 point, whatever that override amount is, that override stays the same over the course of 6 years. So Ricky, real quick, I think it's important for folks, because a lot of these folks are getting into Medicare. Not everybody gets Medicare overrides.
Sure.
But let's say that somebody falls into that category where they do.
Yep.
Explain how the difference will be, because with Medicare, the overrides aren't flat, aren't the same all the way through.
Sure.
In this product, they will be. So explain a little bit there.
So when you're looking at the Medicare space, of course, most people in the Medicare space are going to be brokering contracts, right? You're going to have relationships with multiple carriers. And guys, you guys all know as well as I do, carrier relationships are so important, right? And so you can Google all of these, what the commission levels are and how they break them down based on being a GA or an MGA or SGA or IMO, FMO levels. Then you'll be able to see how those things kind of work based on each carrier, right? And as long as your FMO or IMO is not making a custom grid or doing some types of LOA things, they're going to stay and stick to those requirements, right? Anybody that I work with, 100% sticks to those requirements. No custom grid at all. Now, the cool thing about this product, Platinum, which I'm excited about, is like, how many of you right now have 180% commission? Have you got a 180? No?
Yes, sir.
Okay, but if you had a 30% commission on this, on a 6-year run, what's your commission level? 80. You're going to get 180 on the same product that most of you are selling 110 on. I'm not good at math, but you tell me what the right decision is. Right? Okay? And so when you're looking at what we're doing here, well, people, here will be the argument. I'll get ahead of your objections right now. Well, I would rather have all the money up front because I can do more with the money. No, you can't. I've seen what you do with your money, and it ain't good. That's the truth, guys.
Same goes with the override.
Oh, let's talk the override. So let's just say you have a 5-point override on this deal, right? On your people. We'll do 5 times 6 years. That's a 30-point override. I know what most people's override is in the broker space. It's 5%. And you want to know what you're getting on that 5%? A bucket full of risk. That's what you're getting, right? Am I lying?
That's it.
Okay. And so let's say your average is a 20-point margin. Well, how are you going to maintain retention in your agents at a 20%? Right? Let's say you're sitting at the top comp at a 150 and people are sitting at a 130 and they know they can get a 140, 145 somewhere else because we're just pimping out contracts nowadays, right? We're just giving them away to people who don't deserve them. Well, how are you going to maintain retention with that agent? You won't. Retention in this market comes with mailbox money. It comes with passive. So take a nickel override on this product, it turns into 30% over 6 years, the money's the same, right? You have to maintain integrity in your revenue, otherwise your company will go upside down. I get that, okay? But guys, when did we create a culture that our insurance company partners became our bank? That's not fair to them. I would argue that's not fair to them because that's what they're doing. They're giving us a 0% loan on 150% of production that 75% is going to stay on the books. It's a bad loan. A bank wouldn't give you that loan.
Right.
And that's what we're getting here, right? And so I just feel culturally it's going to create integrity across the board. I hope what this product will do is it's going to bring the pendulum back to where agents, once again, and this is an invitation, I hope that you agents will quit living outside of your means, right? Quit living outside of your means and start focusing your attention to building a residual passive income so you can create stability within your households, so you can create stability within your families. That's why we're here. That's why we did this. The other thing is, here's my second invitation. Sell a product that's going to bring a lot of value to your clients, right? Here's my other invitation. And I'm not going to say, I saw a statistic from a company one time. And what the company said was that if you can get 3 hooks in your client, that your persistency will be over 95%. Okay? Right? But I also grew up in the country where my dad would say, if you're a jack of all trades, you're a king of none. Right? So where's the balance? Where's the balance? Okay? Here's the balance. This won't be popular either, but here's the balance. We're marketing one group of people. Our target market is from the ages of 55 to 85, in a socioeconomic group that can't afford to bury themselves. That's our target, right?
Yep.
Okay, well, let's pull that away. What's our Medicare market? Ages 55 to 85, maybe 65, but 55 if they've been on disability for 2 years, that are in a low-income market. They're the exact same audience. So really, am I a jack of all trades and a king of none? Or do I just have a better tool belt on than you do? I just think I'm better.
Yeah.
No offense. And now that I have this product, I'm a lot better. Because I can come into any home and I can earn any client's business with this product, and I have the Medicare tool belt on, and I can eliminate some of their risk with a hospital indemnity. I've got 3 hooks. Now let's say they can't afford a HIP plan, but they qualify for Medicare. For Medicaid.
Yeah.
Now I've got 3 hooks in them there. What do you think my persistency is going to be? Over 95%.
Sure is.
Okay? The numbers don't lie, guys. So here's my invitation. Get better. Offer products that can't be replaced. Get 3 hooks in your clients and become an expert on what you're trying to sell to a target market. We know our target market. Have the correct tool belt on to be able to service those people. That's the reality. It's what we've all been working for. Guys, if this product's not in your tool belt, you're failing your clients. That's what I'll tell you. If this product is not being offered to your agents, you're failing your agents. And if you don't offer it to them, I'm going to offer it to them. And that's the reality. And so let's swing this thing back where there's more integrity brought back to this marketplace
100%.
than there's ever been.
And this is a non-captive product.
100%.
Okay, so, and we're not saying replace all what you're currently doing now with just this. What we want to do is help you.
Yep.
We want to help you build your residual income. We want to help you help your clients with very liberal underwriting, excellent pricing, smoking, non-smoking, doesn't matter. So we want to do this for you. And what we want to do is have great partnerships out there, provide a lot of value for you. We want to make the contracting very simplistic for you and get you up and rolling as soon as possible. So thank you for watching. Rick, thanks for being here today.
Absolutely. Thank you, guys.
Absolutely awesome. And thank everybody here in the studio. You guys have done a great job.